What is the stock market, and why are so many people afraid of it? From my experience, anytime I mention the phrase stock market, most people are instantly in fear, projecting their negative views on it. You're going to lose all your money. But what if the stock goes down? I don't even know how to buy a stock. The stock market scares me. I understand exactly how they feel because I thought the same way. As human beings, we fear what we don't understand, plain and simple. However, let me help you. Instead of our first instinct being fear, let's try and get a better understanding of this mystery called the stock market. Let me help you go deeper in this subject of investing in the stock market. In this video, I want to outline and describe the stock market and how to win investing in it. So let's build your foundation in this hidden mystery and reveal the secrets to investing in the stock market. Let's get started. What is the stock market's origin? How was it created? Well, we are going to have to go way back to 1531, where the first institution roughly approximating stock market emerged in Antwerp, Belgium. However, rather than buying and selling shares of companies, which did not yet exist, brokers and lenders congregated there to deal in business, government, and even individual debt issues. Let's then fast forward to the year of 1790, when the first stock exchange in the United States was founded. It was called the Philadelphia Stock Exchange. It began in New York City, 1972. Just 2 years after the founding of the Philadelphia Stock Exchange, a group of 24 investors got together in New York on Wall Street. They then proceeded to sign the famous Buttonwood Agreement, starting the New York Stock Exchange. It began with just 5 stocks, but then grew quickly as commerce in New York began to expand. Today, the New York Stock Exchange is the largest stock exchange in the world, dealing in the trillions of dollars every year. A stock is usually described as owning a piece of a company. But what happens when you actually buy a stock? Stocks are a type of security that gives stockholders a share of ownership in a company. So for all of you who are looking to invest into a company, a share of stock gives you an ownership position, equity in the company that issues the stock. Enter in IPO, initial public offering. Say a private-owned company is doing well as far as their profit margins and yearly revenue. That company wants to take the next step further and go public. The reason why they would do this is because they want to raise capital for expansion. So they file for an IPO. Now that privately owned company is now public, and anyone can buy a piece of the company, aka a stock of the company, whatever the share cost per stock may be. So, for example, if you were to buy a stock in Apple, you now have ownership, equity in the company. You are now part owner of the successful large company, Apple. Exciting, right? But let's not get ahead of ourselves. As an owner of the stock, you can now sell or trade your share whenever you choose. Each stock is identified by its own acronym. For example, Apple is AAPL. So don't get confused when you see a name of the company and its stock acronym. They are both the same thing. We fear what we do not understand. However, I want to help you change how you handle that fear. Let fear be a catalyst to getting a deeper understanding of what you fear. In this case, the stock market. Yes, the stock market is full of numerous subjects and nuances, but once you have a better understanding of how the stock market can benefit you, you will conquer your fear of it. Now, most people have some idea of what the stock market can do. You buy a stock and then it goes up, or in stock terms, a bull market. However, that same stock can go down as well, aka a bear market. and that is what we fear. But let me fill you in on something that will change your mind. A bear market is the best thing that can ever happen to you. Let me explain why. Let's go over some terms. First, a correction. A correction occurs when the stock market drops at a max of 10%. A crash or bear market is when the stock market drops at 20% or more. Studies have shown since 1900 we have had a correction every year, so you can only assume every year we will have a correction. Almost like when winter comes.
And winter is coming.
It comes every year, but it can vary on length. No one panics when the winter comes because we know it's coming. But here's something you need to know. 80% of corrections never become a bear market. So a lot of people do what they call panic sell. The stock market is going down. I need to sell my stocks. However, corrections only last on average about 2 months, and then the stocks will recover. So during the correction, the price of the stock is a lot cheaper, which is actually the best time for you to purchase the stock. Get where I'm going with this? Fear can make you miss out on wonderful opportunities, and in this case, because the stock price dropped, you let fear control you. But now that you have a better understanding of what to do when the stock drops, fear has to go. Now what about the bear market, aka the crash? Studies show we usually have one every 3 to 5 years. The average length of a bear market is 1 year, and the average drop in stock price of the bear is 33%. But it is the greatest opportunity in your lifetime. The stock market is the only place where if things go on sale, people lose their minds. Picture your favorite car. Everyone knows Lamborghinis, right? Now, if a Lamborghini went on sale for 50% off, would everyone freak out? With the stock prices pretty much going on sale, you must take advantage of this great opportunity. Buy in and hold, and in a year, the price will recover and your return on your investment will be astronomical. Now there are two types of investors. You have a day trader and a long-term investor. A day trader is someone who is constantly watching the market, trying to make a profit as fast as possible. They are trying to time the market, which is pretty much impossible to do. A long-term investor, which is who you want to be, buys a stock and holds for at least 10 to 20 years. Now the stock price will go up and down during that time, but in the long term you would generally expect a return of 7 to 10% per year on your investment, which is pretty good. The term buy the dip is always floated around when dealing with the purchasing of stocks. Ideally, you want to buy the stock at a low price and sell at a high price so you can make a profit. You also hear a lot of people saying you have to time the market. However, that is trying to play God and know when the price will go up or down. So when going to purchase a stock, just buy in whatever the price is at and you will make a profit because you are a long-term investor. So now that you have a better understanding of the stock market and you know you want to be a long-term investor, I recommend 2 stock brokerages that you can use. A brokerage account is a system used to purchase the buying and selling of stocks. One is called Robinhood and the other is Webull. These 2 brokerages are the most popular and are easy to use in my opinion. Now, I'm not sponsored by any of these 2 companies. I'm just giving my opinion on which I think are the 2 best to use. They are both free brokerage accounts where you can buy and sell stocks without a fee. The reason I mention this is because some brokerages out there require a fee whenever a stock is bought or sold. Robinhood and Webull are pretty much straightforward when it comes to their user interface. Now you are probably wondering, all right, Michael, let's get down to the nitty-gritty stuff. Which stocks do I buy? Well, there are many different types of stocks you can purchase. We are going to focus on 2 of them. They are single stocks and ETFs. A single stock is when you buy a stock from a single company. An ETF is an exchange-traded fund whereby which you can purchase one stock that has a basket of companies within that one stock. This is a way of diversifying your investments so that you don't have all your eggs in one basket. An example of an ETF is the Vanguard S&P 500 or acronym VOO. This stock tracks the top 500 companies in the world. So back to the question, which stocks should you invest your money in? I believe putting most of your money in an ETF is a safe bet. Another ETF is QQQ. This ETF tracks the top technology companies. Technology is always growing and will always be needed, therefore this is another safe bet. When purchasing single stocks, I recommend investing in a company you understand and are a consumer from it. For me, I love Apple products, so I would invest in Apple stock. Amazon is another, and I love watching TV shows, so Netflix is another. These companies have done very well over the course of the years, and I believe they will continue to do so. I encourage you to take a look at the company you are a consumer of and go from there. When purchasing a stock or an ETF, there are some different ways you can buy them. You can either purchase a stock or ETF at shares, in dollars, or limit order. Let me explain. Purchasing a stock at shares is when you buy the price of the stock at its current value. So if Netflix stock per share is $300, then in order to purchase a share or the stock, you must buy $300 per stock. Now let's talk about in dollars. At the time of this recording, Tesla's price per stock is $673. Now, if you wanted to invest in this company, in dollars, you can buy whatever amount you like, even if it does not equal to the exact share price. So if you wanted to invest $20 into Tesla, this is possible. You will just get a return on your $20 investment instead of the full stock price, which is still a smart thing to do. And lastly, the limit order. A limit order is an order to buy or sell a stock at a specific price or better. A buy limit order can only be executed at the limit price or higher. So if Facebook stock is at $200 and you set a limit order of $150, your order will not be executed until the price of the stock reaches $150. With a limit order, it starts to get tricky as if you're trying to time the market, but it can also be beneficial when trying to make a good profit on your investment. I'm gonna say it again, just invest for the long term. Hold for 10 to 20 years, and I promise you, you will not be disappointed with your return on your investment. I know I wasn't able to get every single detail of the stock market explained, but hopefully I was able to help build your foundation of the basics when it comes to investing in the stock market. If you want to do more research, yes, I encourage you to do more. Most individuals are always complaining, man, how do the rich keep making more and more money? It is very simple. They understand the concept of investing and making their earned money work for them. It's all about multiplication. Instead of buying shoes, cars, clothes, and all that, focus on acquiring assets, focus on investing, and then you'll be able to afford those luxuries. Let's become financially literate together so we can live a life with no regrets and enjoy this thing we call life to the fullest. What's up everyone? My name is Michael Abladi. I hope after watching this video, you now have a better understanding and strong foundation in this mystery that we call the stock market. I'd hate for any of you to miss out on a great opportunity investing and making your money grow in the stock market just because of your fear of it. And like I've said it in the video, we fear what we do not understand. Now, if you want to go deeper, which I encourage you to do so, please do go deeper, do some more research in the stock market and figure out a way to where we can make our money work for us. And the whole goal is for us to become financially literate so that we can live this life to the fullest. And thank you again for watching this video. Oh, please comment below, whatever, like negative, positive, hopefully it's positive comment, but yes, comment below, subscribe to the channel, like this video, subscribe to the channel, and yeah, thanks. Stay blessed. I'm out.